In this session, we are trying to solve questions of RTP September 25. Let us directly get to it. As usual, your first question is talking about true or false. You can look at the question. State with reasons whether the following statements are true or false. Everybody will respond. At the at the end of the accounting year, all nominal accounts of the ledger are balanced. This statement is false. Why? Because they are not balanced, they are going to be closed by a transfer to your profit and loss account. Outstanding expense is a nominal account. False. Outstanding expense is it's a liability as per your modern approach. Traditional approach, nominal account, so you should say representative personal account. Bank reconciliation statement is prepared to arrive at bank balance. False. It does not arrive at the bank balance. It is prepared to reconcile the bank balance as per cash book and as per passbook. Provision for discount on debtors is calculated before deducting the provision for doubtful debts from debtors. False. You first provide doubtful debts and then you create provision for discount on debtors. Land is also a depreciable asset. False. What is the reason? It is not that land is an appreciating asset. Please understand one factor. Understand one factor over here. Depreciation, does it depend on market value? No, the market value of the asset changes doesn't mean that we record depreciation. What is depreciation? Allocation of depreciable amount over life. Land does not have a limited life, therefore it is not depreciated. The life of land is unlimited, therefore it cannot be depreciated. Periodic inventory system is a method of ascertaining inventory by taking actual physical count of inventory. Periodic system is based on physical verification. This statement is true. Perpetual system is based on book records. You can write this as a reason. Both revenue and capital nature transactions are recorded in receipts and payments account. Receipts and payments accounts records both capital and revenue items. This is true. Income and expenditure account records only revenue items. Debenture suspense account appears on liabilities side of balance sheet. False. It appears on asset side of balance sheet when debentures are issued as a collateral security. I hope that was clear. How many of you got all correct? How many of you got all correct? Very good. Laziness to raise hand. Go by fellows. If it's true, you have to write a reason with an explanation. Okay. Theoretical framework continuing below. Briefly explain the following. Money measurement concept. Only those transactions measurable in terms of money will be recorded. Something that you cannot measure in terms of money will not be recorded. And what is money? It is rupees. If they are having a transaction in foreign currency, it will be converted to home currency and you will record everything in a uniform rate. This is all money measurement concept. If I go below that, periodicity concept. The life of a business is long, uncertain, indefinite. You will break it down into smaller intervals of time. Each time gap is called as an accounting period. Does it have to be 1 year? No, it can be less than 1 year or more than 1 year. Generally, it is followed as the accounting period. Periodicity concept helps us to follow consistency, matching concept, and comparison from year to year. Is that clear? Differentiate between provision and contingent liability. Economic outflow probable for provision, economic outflow not probable for contingent liability. It can be estimated, it cannot be estimated. Provisions are recorded, contingent liabilities are not recorded. Then contingent liability can be disclosed or should be disclosed in your financial statements. You can give the meaning of both and this will give you around 4 marks in the exam. Okay, below that, you are required to pass necessary journal entries. Employee had taken stock worth rupees 50,000, cost price 45,000 on the eve of New Year and the same was deducted from their salaries in the subsequent month. What is the entry? Salary account debit to purchases account. But this would have been the entry. This is the answer as per ICAI, but I feel there is a logical mistake over here. Why? In the subsequent month, that means what? It is not salary, it is a prepaid salary. So you record prepaid salary and then transfer salary account debit to prepaid salary account. ICI has given a combination of these two together. They directly did salary to purchases. Will you take cost price or selling price? All of this is going to be cost price of 45,000. Wages paid for erection of machinery 16,000. Very simple. Machinery account debit to cash. Withdrawn for personal use, goods of selling price this much, cost price this much, and cash rupees this much. What will you record? Drawings account debit to purchases to cash. Purchase kitna? 6,000. Drawings of cash 1,000. Total drawings 7,000. Easy, not easy? Very easy. How many of you got all correct till now? Others go jump. Next one. Purchased from Sandeep, goods of list price 60,000. He allowed 10% trade discount, 1,500 cash discount was also allowed for quick payment. First you will record purchases to Sandeep. Kitna? 60,000 minus 10%, 54,000 will be recorded as credit purchase. Then we are going to make a payment. Sandeep account debit to cash to discount received. 54,000 was the value payable. How much discount I have got? 1,500 discount. What is your amount paid? 52,500. Again, ICI has combined both these entries together and recorded Sandeep account debit to cash to discount received. Sorry, purchase account debit to cash to discount received. Sandeep debit, Sandeep credit has been cancelled. If I record a compound entry, what would be the mistake over here? Cash discount is given in a cash transaction, which is logically not correct. Cash discount should be given in a credit transaction. Purchase of second hand machinery from Jawahar Industries for 3 lakh plus CGST, SGST 6%, paid 1 lakh immediately by check, balance to be paid after 2 months. I want you all to first tell me what is the journal entry for purchase of second hand machinery. Machinery account debited to bank, but in that there is a part payment being made and part is on credit. So what would you record? Machinery account debit to bank to Jawahar Traders. Agree, yes or no? Yes, sir. Now, along with this, we need to also record GST. GST at the time of purchase or sale? Purchase. GST at the time of purchase, called as input GST, being an asset. Input CGST, SGST? Yes. Input CGST debit. Input SGST also goes debit. What is the value of machine? 3 lakh. What is your GST? 3 lakh into 6%. 18,000 CGST, 18,000 SGST. How much is paid immediately? 1 lakh. What is the balance? 2 lakh 36,000. How many of you got this right? Good. Can we go ahead? Okay. Classify each of the following into capital or revenue. Inauguration expenses of a new manufacturing unit in an existing business. Revenue expense. Inauguration expenses are revenue in nature. Installation of a new central heating system. Capital expense. Providing drainage for a new piece of water extraction equipment. Capital expense. Extension of railways in a railway track in a factory. Capital expense. All these are giving benefit for more than 1 year, becomes a capital expense. Is that clear, everybody? Any doubt before we go ahead? Okay. Finish 3 questions very fast. There are only 18 questions in this particular RTP. You finished 3. Yes, dear. Capital. So continuing ahead, one of your clients, Mr. Hariom, has asked you to finalize his accounts for the year ended 31st March. As a basis for the audit, Mr. Hariom gave you the following statement. They've given you a trial balance. The closing inventory was 8,612. Hariom claims that he has recorded every transaction correctly in the trial balance. Check the accuracy of the above trial balance. Give reasons for any errors. Can we go ahead to check the accuracy? I'll give you an item. You tell me which side to record. Hariom's capital. credit side, correct. Hariom's drawings, debit side, correct. Leasehold premises, property and land and building, debit side, correct. Sales, credit. Due from customers means they are debtors. It is supposed to have debit balance. It will come on the debit side. Purchases, debit, correct. Purchase return should have credit balance. Hariom has given you a trial balance. It is wrong. We need to make a rectification. Loan from bank, liability, credit. Trade expenses, debit. Trade payable, credit. Bills payable, credit. Salaries, wages, correct. Cash at bank, debit, correct. Opening inventory, debit. Rent and rates, debit. Sales return, debit. Once you make these changes, you will get your correct trial balance. Are we supposed to take closing stock? No, sir. Closing stock will not appear in your trial balance. Any doubt? Okay. Let's come down to the next one. Everybody, rectification of errors. Write out the journal entries to rectify the following errors using a suspense account. When they say using a suspense account, can you tell me which stage are they talking about? They're talking about stage 2 after trial balance. Goods of the value 15,000 returned by Aman were entered in the sales day book and posted therefrom to the credit of his account. I give you 30 seconds. I give you a minute. Try. Goods of the value 15,000 returned by Aman, entered in sales book, posted to the credit of his account. What is the correct entry, beta? Goods returned by Aman. Sales return account debit to Aman. Kitna? 15,000, 15,000. The question is saying what? Has been entered in the sales day book. They have recorded 2 sales, 15,000 and posted therefrom to the credit of his account. To Aman, 15,000. Debit credit not matching. What will you get? Suspense will come on which side? Debit side, how much? 30,000. Based on this, what is your rectification entry that you are going to pass? We will record sales account debit 15,000, sales return account debit 15,000 to suspense account 30,000. How many of you got this right? Good. Let's look at the next one. Amount of 7,500 entered in the sales return book has been posted to the debit of Ashish who returned the goods. Take 30 seconds. Try. Those of you who are watching this online, if you want more time, pause the video, try and then check your answers. Do not blindly copy from the video. So the transaction is dealing with what? Goods returned by Ashish. Is it sales return? Ashish returned the goods. So it's a sales return. Tell me what is your correct entry? Sales return account debit to Ashish account. How much is the amount? 7,500. 7,500. What is the wrong entry saying? The wrong entry is saying has been posted to the debit of Ashish. So they have done Ashish account debit 7,500. What about sales return? Sales return has been correctly debited 7,500. Debit credit not matching. What will you get? Suspense will come on which side? Credit side how much? 15,000. Based on this, what would be your rectification entry? Suspense account debit to Ashish account. Suspense to Ashish kitna? 15,000, 15,000. For Ashish it is wrong, opposite accounting. Credit has been taken as debit. Double rectification. How many of you got both correct? Okay with the speed? Next, come down to the third one. The total of discount allowed column in the cash book for the month of June 27,500 was not posted, though correctly recorded in debtor account. So tell me, what is the correct entry for discount allowed? Discount allowed account debited to debtor account. How much is the amount? 27,500. 27,500 is not posted to discount allowed account. It was correctly posted to debtor account. Debtor has been credited. There is no debit. What will you get? Suspense account will be debited. Automatically, what is your rectification entry? Your rectification entry will be discount allowed account debited to suspense. Discount allowed to suspense 27,500. 27,500. Can we go ahead? Bad debts aggregating to 8,000 were written off during the year, not posted to bad debt account. Very simple. What is your correct entry for bad debt? Bad debt account debit to debtor. Is it 8,000? Yes, sir. Was not posted to which account? Bad debt account. So debtor account they have posted, bad debt account not posted. You will get suspense on the debit side. Similar to the previous case, what is your rectification entry? Rectification, bad debt account debit to suspense account. Kitna? 8,000. 8,000. Come down to the fifth one. What is the next transaction saying? A sale of 30,000 made to Avya was correctly entered in the sales day book but wrongly posted to the debit of Adya. Try this one. It's nice. How many of you got it right? Yes, dear. What's the answer? Okay. Can I solve? Can I solve this fifth one? Okay. A sale of 30,000 made to Avya. Can you all tell me what is the correct entry? Avya account debit to sales. Kitna? 30,000. 30,000. The question is saying was correctly entered in the sales day book, wrongly posted to the debit of Adya as 3,000. What is the wrong entry? Adya account debited to sales. But if you observe over here, how much amount is debited? 3,000. How much is credited? 30,000. What is the difference? 27,000 will be debited to suspense. How many of you got this right? What I've written on the board is the wrong answer. You did not observe the names are also changed. Oh, I've written correctly. Some of you did not observe Avya and Adya. The sale was made to Avya, but you recorded in the account of Adya. So based on this, what would be your rectification entry? Your rectification entry will be Avya account debit 30,000 to Adya account 3,000 to suspense account 27,000. How many of you recorded Avya to sales, or rather Avya to suspense 2727? If you recorded purple color, that means you did not notice the difference in the name. There is a difference in name. One is Avya, one is Adya. Is that clear? Can we come down to the last one? Write down. Come down to point number 6. The supplier account has been overcast by 225. Very simple. Supplier account. What is the correct entry? Supplier is a creditor. Creditor is a liability. It should be credited. Credited by kitna? Credited by rupees X. But what they have done wrongly? Your supplier account is credited by how much? Overcast or undercast? X plus 225. Creditor account has been over credited. What will be your rectification entry? It has been over credited. Now you should debit the account. Supplier account debit to suspense account. Kitna? 225, 225. How many of you got all correct? Good. Yes, dear. Instead of supplier, can I write creditor? Okay. Do we need to write the narration? Yes. Journal entries always have to be with narration. Can we go ahead to the next one? Yes, sir. Chalo, come down to the next one. One of my favorite questions, bank reconciliation statement. Not this question, but the chapter as a whole. I do not want anyone to lose marks. Let me see how many of you get all elements correct. Ready to do your Bharatnatyam? Very good. Very nice. People are ready. Good. Okay. The cash book of Messrs. Nazar or Mazar shows 27,570 as the balance at bank as on 31st March. What is 27,570? Balance as per cash book. Is it positive balance or negative balance? You have a positive favorable balance of 27,570 in the cash book. This does not agree with the bank statement. On scrutiny, the following discrepancies were found. The question is saying prepare bank reconciliation statement as on 31st March. Adjusted cash book not required, only BRS. Let's go ahead to understand, add or deduct. Everybody, subsidy of 10,250 received from the government directly by the bank, not advised to the company. What happens? Your passbook goes up. Beta, if your passbook is higher, what are you going to do? You are going to add. So I will say add 10,250. Next one. On 15th March, the payment side of the cash book was undercast by 350. Beta, if your payment side is lower, if your payments are less, your cash book balance will be high. Cash book balance is higher, you're going to deduct how much? 350. In your passbook, you recorded the correct payment. In your cash book, you recorded 350 less payment. Cash book will be higher. On 20th March, wait, can I go ahead? Okay, on 20th March, the debit balance of 2156 as on previous day was brought forward as a credit balance. What should I do? Debit balance brought forward as a credit balance. It is supposed to be positive. You recorded negative. Add or deduct? Add. How much will I add? Twice the amount. 2156 to reach 0, 2156 to reach the debit. You will add 4, 3, 1, 2. In this case, your cash book has gone down. Next one, the customer of Mrs. Mazars who received a discount of 5% on his account of 2000 paid Mazars a check on 24th March. Cashier erroneously entered the gross amount in the cash book. In the cash book, how much you recorded? 2000. But how much you actually received? 2000 minus 5%, 1900. Passbook 1900, cash book 2000. What are we supposed to do? Deduct. How much will you deduct? 100. Is that clear, everyone? Can we go ahead to the fifth one? Yes, sir. Fifth one. On 10th March, a bill of 5,700 was discounted from the bank, entered in the cash book, but the proceeds credited in the bank are 5,500 only. Carefully think and tell me what was the value of the bill? 5,700. How much you received in your bank? 5,500. 5,500 in your passbook, 5,700 in your cash book. What are you going to do? How much will you deduct? 200 minus 200. Your cash book has gone up, or your cash book is higher than the passbook. A check issued amounting to a check issued amounting to 1725 to Ravi. They've misplaced the printing over there. Returned marked out of date, no entry made in the cash book. You issued a check, cash book has gone down. The check was returned, passbook no entry. Cash book starting point, what to do? Add. Cash book had gone down. How much will you add? 1725. Hey, go by class. I hope are you calculating on the calculator? I need to know the final answer. So whatever we are doing, add or deduct, please type on the calculator also. Let's continue ahead. Insurance premium 900 paid directly by the bank. Passbook goes down. Add or deduct? Minus 900. Bill receivable for 1530 discounted for 1500 with the bank had been dishonored on 30th March. Advice was received on 1st April. Bill discounted, dishonored. Drawee was supposed to pay money. Drawee did not pay the money. Banker will take money from drawer. Passbook goes down. Cash book starting point. What to do? Deduct. How much will you deduct? 1530, including the discount. You have to pay the banker full money. Bank recorded a cash deposit 1650 as 1560. How much did you actually deposit? 1650 is the correct amount. Passbook 1650. Cash book? No. Cash book 1650. Passbook 1560. Cash book is higher. What will you do? Deduct. How much will you deduct? 90 minus 90. In this case, cash book was higher. Check and tell me now what is the final balance which is remaining. 40,687. Let us just check whether it is matching to our answer or not. Bank reconciliation statement 40,687. Same answer got by us. Any doubt in any of the elements? No, sir. Can we go ahead to the next one? Okay. Everybody, calculator in hand, valuation of inventory. Come back to class. Let us go ahead for next question. From the following particulars, ascertain the value of inventory on 31st March 25. Ascertain the closing balance. Inventory on 1st April 2024. They've given you opening balance. Purchases made during the year. What will you do? Purchases made will be added. Sales. What am I going to do? Deduct, but I should convert it to cost of sales. Manufacturing expenses, add. Selling and distribution expenses, ignore. Administration expenses, ignore. To calculate cost of sales, they've given you certain data below. At the time of inventory valuation on 31st March, a sum of 60,000 was written off on a particular item which was originally purchased for 165. This product was sold for 1,50,000 during the year. Except for the above mentioned transaction, gross profit earned was 20% on sales. Can you find out the value of closing stock? I give you all 2 minutes. Try to find out. Online students, again, pause 2 minutes, calculate, then check the answer. Okay, I'll go ahead to solve this question. Beta, you first tell me what is the value of opening stock. All of you check and tell me how much is your opening stock. Your opening stock is at 10,50,000. To this, add purchases. How much is purchases? 36 lakh. To this, add manufacturing expenses. Kitna manufacturing expenses? 3 lakh. Less, what should I do? Less cost of sales. Let us try to find out cost of sales as a separate working note. Working note number 1. How much is sales? Total sales is kitna? 55 lakh. 55 lakh or 55 lakh 50,000? 55 lakh 50,000. In this, how much is abnormal sale? Your abnormal sale is given as 1,50,000. So what is your normal sale? 55 lakh minus 1,50,000, 54 lakh. What will be your normal profit? Apart from that abnormal transaction, normal profit is given at 20%. 20% on cost or sale? 20% on sale directly. 54 lakh into 20% kitna? 10,80,000 is your normal profit. Agree, yes or no? Abnormal sales is 1,50,000. What is the cost of abnormal item? Cost of abnormal item is given in the question. The cost of the product was 1,65,000. 60,000 had been written off. So what was your cost? 1,05,000. How you got 1,05,000? 165 minus amount written off 60. This can be called as either cost or can be called as book value of the abnormal item. Your abnormal item is 1,05,000. Normal 54 minus 1080. 54 lakh minus 10,80,000. Kitna? 54 lakh minus 10,80,000. 43 lakh 20,000. 43 lakh 20,000 plus 1,05,000. 44 lakh 25,000. 44 lakh 25,000 you deduct, you will get your closing stock. Check and tell me closing stock kitna? 5 lakh 25,000. How many of you got 5 lakh 25,000 correct? Good. Okay. Can we go ahead to the next one? Can I go ahead to the next one? Okay. Come down to the next question. Depreciation. A purchased a machine on 1st January 2021 for 194, spent 6,000 on its erection. What is the cost of M1? 2 lakh. On 1st July 21, another machine costing 1 lakh were purchased. M2 kitna? 1 lakh. On 1st Jan 23, machine purchased on 1st Jan 21 having becoming obsolete were auctioned for 1 lakh. What is the orange color paragraph talking about? Sale of M1. Selling price 1 lakh. On 1st July 23, a new machine was purchased at a cost of 150. M3 150. Depreciation to be provided annually on 31st December at a rate of 10% per annum on original cost of machinery. In 2024, a change in the method of 15% method of writing of 15% per annum in written down value. They've not completed the sentence over there. In 2024, there is a change in the method of depreciation. Show machinery account for 2021 to 2024. Can we go ahead to prepare? Yes, sir. We'll start by preparing working note. What is the working note that I will prepare? Calculation of depreciation on machinery. How many columns will I draw? Machinery and then 3 particulars and then 3 amount columns. So you have particulars, machine 1, machine 2, machine 3. I start by recording what? Preferably I record date of acquisition. M1. Look at the question. What is the date of acquisition of M1? 1st January 2021. M2. 1st July 2021. M3. Blue color. 1st July 23. Okay. So we will start with which year? We will start with your 2021. What is the cost of M1? 2 lakh. How 2 lakh? 194 plus 6. What is the cost of M2? 1 lakh directly given to you. In 2021, is there any other transaction? No, sir. Less depreciation, 20,000. Here, M2, not 10, 5. Why 5? 6 months. 2 lakh into 10%, 1 lakh into 10% into 6 by 12. Now check and tell me what is your WDV. For 2022, you get your WDV 1,80,000, then 1,95,000. Second, third asset is still not there. 1 lakh, oh, not 1,95,000, only 95. Okay. M3 is not there. In the second year, I directly record depreciation. Which method? Straight line method. So 20,000 for M1, 10,000 for M2. How, sir? 2 lakh into 10%, 1 lakh into 10%. You get your WDV. Kitna WDV? In 2023, the WDV of M1 is equal to 1,60,000. M2, 85,000. In 2023, did I buy the new asset? Yes, sir. What is the value of the third asset? 1,50,000. Less depreciation. M1, 2 lakh into 10%. M2, 1 lakh into 10%. M3, 1.5 lakh into 10% into 6 by 12. Kitna? 20,000, 10,000, 7,500. So below that, you can calculate WDV. Yes, dear. Which machine is sold? Orange color. Acha, I did not take the orange color part. On 1st Jan 23, the machine purchased on. Okay, 1st Jan it was sold. So you will just not record this part. There will be no depreciation on first asset. Why? First asset has been sold. Okay, now calculate your WDV of the respective assets. M1 will not exist. M2, 75,000. M3, 1,42,500. Do we have one more year? In 2024, they changed the method of depreciation to 15% per annum. Can you all calculate and tell me in this year what will be your depreciation? कितना? 15%, right? Yes, sir. Okay. So below this, I will say less depreciation for M2, 75,000 into 0.15. For M3, 142,500 into 0.15. Kitna? 11,250 and 21,375. What do you get? WDV of the machine after this. In the year 2025, M1 is not there. M2, 63750. M3, 1,21,125. How many of you got all this calculation right? Good. Is there any other calculation required? Yes, sir. Can I go ahead? Okay. I continue below that. Working note number 2. Working note number 1 was calculation of depreciation. Working note number 2, profit or loss. What was your selling price, beta? Your selling price is given in the question 1 lakh. What is your WDV of M1 on the date of sale? How much is your WDV of M1? 1 lakh 60,000. Yes, 1 lakh 60,000 is your WDV. Selling price 1 lakh, your WDV is 1 lakh 60,000. Do you have a profit or a loss? Loss on sale of fixed asset. Kitna? 60,000. How many of you got this right? Good. Will you be able to prepare the ledger account? Yes, sir. Let us just check what should be the closing balance of the ledger. 63,750 plus 121125 in the year 25 opening balance or 24 closing kitna 184,875. Let us check if our calculations are right. If I come down to your previous one, inventory 5,25,000, correct. Next one, machinery account, I'll just check the final answer, 184,875. I hope if you have done the calculations, you can do the posting of the account. Agree, yes or no? Any doubt in the posting? No, sir. Okay. Let's continue ahead. Bills of exchange. Next question, Kabir accepted a bill of 10,000. Before I go ahead, I'm just reading past journal entries, prepare journal entries in the books of Samarveer. Kabir accepted a bill of 1 lakh 10,000 drawn on him by Samarveer on 1st August. Kabir accepted the bill. For Samarveer, it is bill receivable. Entry bolo. For the first part marked in yellow color, this was the amount which Kabir owed to Samarveer. For this yellow color transaction, what will you record? Bill receivable account debit to Kabir. On the same day, Samarveer got the bill discounted with his banker 9,800. What to record? Cash or bank account debit 9,800. Discount allowed account debit 200. To bill receivable 10,000. On the due date, Kabir approached Samarveer for renewal of the bill. Bill has been dishonored. What entry to pass? Kabir account debit to bank, not to BR, because the bill has been discounted. Samarveer will now pay the money to the banker. Kabir to bank kitna? 10,000. Mr. Kabir agreed on the condition that 2,000 be paid immediately along with interest on the remaining amount at 12% per annum for 3 months, and that for the remaining balance B should accept a new bill for 3 months. In the pink color part, what's the first point saying? What is the first point saying? Kabir should pay 2,000 immediately. What will be the entry? Kabir agreed on the condition that 2,000 be paid immediately. 1 second. Kabir approached Samarveer for renewal. Question should have been Samarveer agreed on the condition that. The question is again misprinted over there. Samarveer agreed on the condition that 2,000 be paid immediately. Who will pay money to whom? Kabir pays to Samarveer. So in the books of Kabir, what will you have? In the books of Kabir, it will be a payment. Kabir agreed on a condition that 2,000 be paid immediately. Kabir is paying the money to Samarveer. What would be the entry? What would be the entry? Cash account debited to Kabir account 2,000 along with interest at 12% per annum on the balance. What was the total amount? 10,000. In that 2,000 is paid. How much is the balance? 8,000. What is the rate of interest? 12%. What is the time period given? 3/12. Kitna interest? 240 interest also to be paid immediately. What would be the entry? Cash account debit to interest. Cash to Kabir to cash to interest 240. Correct. And that for the remaining balance, we would accept a bill for 3 months. For this entry, again, you will record bill receivable to Kabir 8,000. These arrangements were carried out on 31st December. Kabir became insolvent and his estate could pay 40%. His estate became insolvent. Again, you will record dishonor of the bill. Kabir to BR, you received 40%, cash account debit 40%, bad debt account debit 60%, to Kabir the balance. What will be the cash received? 8,000 into 40%, 3,200. How much is your bad debt? 4,800. Got it right? Let us just quickly see the entries in your material. We'll start by recording BR to Kabir, discounting of the bill, bank discount to BR, dishonor Kabir to bank, interest Kabir to interest, cash BR to Kabir. I gave a different entry for this. I said cash to Kabir and I gave cash to interest. Can that also be done? Yes, sir. Drawing a new bill, Kabir to BR, and then dishonor bank bad debt to Kabir. One entry is missing over here. They have not recorded one entry here. You need to record dishonor of the bill, Kabir account debit to bill receivable. They did not dishonor the bill. If they have recorded directly, then here instead of Kabir, they should have taken bill receivable. But since they have recorded Kabir, first they should record dishonor of the bill over there. How many of you got all entries right? Good. Can we go ahead? Okay, in this question, I do understand there was some confusion. It was not that Kabir agreed, Saramveer agreed, Samarveer agreed. Last entry, what sir? First we will record dishonor, Kabir to BR, then you record bank debit, bad debt debit to Kabir. Oh, okay. They have recorded. Acha, they have combined one more entry together. I gave here one more entry. I gave BR to Kabir. I gave 3 separate entries for all this together. They have recorded it. Okay, that's correct. What I say as recorded is also correct, and I gave separate entries. Okay, continue ahead. Next point. Final accounts and rectification of errors. The following is the trial balance of a company. I just want to come down to see what they've given. They've given me 4 points for rectification. Give the necessary journal entries and prepare final accounts. Can we go ahead to check? Yes, sir. You will first give me entries for rectification. Stock as on 31st March was valued at 7,50,000. Depreciation is to be provided at 10% on fixed assets. There are 2 adjustments over here. One is your closing stock and one is your depreciation. Depreciation to be provided on fixed assets purchased. Okay. Scrutiny of the books gives the following matters. 1,50,000 drawn from the bank was debited to drawings account, but out of this amount, 90,000 was used in the business for day-to-day expenses. Can you tell me what is the correct entry? Your correct entry should have been dash. Your correct entry should have been drawings account debit, expenses account debit to bank. How much is the business expenses? 90,000. How much is withdrawn from the bank? 1,50,000. So how much is drawings? Your drawings is 60,000. But what is the wrong entry that they recorded? They recorded fully as drawings. Drawings account debit to bank. 1,50,000, 1,50,000. Based on this, what is your rectification entry? Rectification entry will be expenses account debit to drawings. How much? 90,000, 90,000. Can you also tell me immediately the effect in my accounts? Expenses debited. What to do? Expense goes up. Add it to your expense in the P&L account. Drawings is credited. Drawings goes down, or you can say capital goes up. So you can either say deduct from drawings or you can say add to capital. Effect will be the same. I'm not just discussing the entry, I'm also giving you the effect in the final accounts. Is that okay? Can we go to the next one? Purchase of goods worth 120 was not recorded in the books of accounts up to 31st March, but the goods were included in the stock. Very simple. Purchase of goods not recorded. If it is not recorded, your correct entry becomes rectification entry. Why? Because there is no any wrong entry. Correct entry becomes rectification entry. Bolo. Purchase account debit to creditor account. How much? 1,20,000, 1,20,000. What is the effect in your accounts? Purchase has been debited, expense goes up. Add to purchases, creditor liability goes up. Add to creditor. Aito? Sir, can we record purchase to cash? Yes, they have not specified whether it is cash or credit. So you can record any of the two. It has already been included in stock. Stock value will not change. I only record my purchases. Come down to the third one. What is the next third one saying? Purchase returns of 7,500 was wrongly recorded in sales return journal and the amount was correctly posted to the party account on correct side. Can you tell me what is the transaction talking about? Purchase return, but it was wrongly recorded in sales return. So what is your correct entry? Your correct entry is what? Creditor account debit to purchase return. How much? 7,500, 7,500. What is the wrong entry that they have passed? Was passed in sales return journal. Party account is correct side. So creditor was debited 7,500. Sales return was also debited 7,500. Debit credit not matching, you will get suspense. Suspense will come on which side? Credit side 15,000. Based on this, what is your rectification entry? Suspense account debit to purchase return to sales return. Suspense 15,000, purchase return 7,500, sales return 7,500. Got this entry right? Okay. Now what will be the effect? Suspense account, check if it is there in the question. If you see the given trial balance, you have suspense on the credit side. Kitna? 15. So what will happen to that suspense? That suspense now gets cancelled. You will deduct this from your credit balance. Purchase return credited. What should I do? Option number 1, you can say purchase return goes up or you can say purchase goes down. Sales return is credited. Sales return goes down or sales goes up. So when I say up down, automatically add or deduct. Got this right? Okay. Come down to fourth adjustment. Expenses include 45,000 in respect of the period after 31st March. Expenses paid in advance called as what? Prepaid expense. Correct entry would have been prepaid expense to cash. Wrong entry, they put it under expense account. Expense account debit to cash. What would be your rectification in this case? Prepaid expense account debit to expense account. Prepaid expense debited, show it on the asset side of balance sheet. Expense credited, what to do? Deduct from your expenses. Expense credit goes down. Now if I recall correctly, entry number 1 and entry number 4 had an adjustment of expenses. In the first one or point A it was added and in your point D it will be deducted. Is this clear? Yes sir. This completes my journal entry. What is the other aspect, sir? Stock on 31st March. Where will you record stock? One is your balance sheet asset side and one is your trading account credit side. Depreciation to be provided on 10% per annum. What is the first effect? Balance sheet deduct from asset, P&L account, show it on debit side. Kitna? I go back and see depreciation on fixed asset purchased. Where is your fixed asset purchased? Fixed asset purchased, opening or additions? No, only both or not both. Depreciation is to be provided on fixed asset purchased only on the additions. Additions was how much? 15 lakh. So 15 lakh into 10%, 1 lakh 50,000 will be your additional depreciation to be recorded. Sir, what about the old assets? If I go back to see somewhere in the question, they have not mentioned anything about the old assets. Let it be, no problem. They want only depreciation on the new assets. Is that clear? Yes or no, sir? Okay, what will I go ahead to prepare below this? What will I go ahead to prepare below this? I'll go ahead to prepare your trading account, P&L account and balance sheet. Somewhere they should have given data for depreciation. Check the question once. Coming, one second. Check if they have given depreciation on the opening assets somewhere. Correct. Only purchased during the year. I understand these assets. Oh, they have also given the date of purchase. So it will not be 1,50,000. It will be 15 lakh into 10% into 6 by 12. Kitna? 75,000. But what about the opening assets? They have not given anything. Okay. They've not given anything about those opening assets. You can leave it as it is. Okay. Yes, sir. Okay. Everybody will read. What about the items in the trial balance? Where to record? Capital, balance sheet, liabilities side, drawings, balance sheet, liabilities side, deduct, fixed assets, balance sheet, asset side, addition to fixed asset, balance sheet, asset side, opening stock, trading account, debit side, purchases, trading account, debit side, purchase return, trading account, debit side, deduct, sales, trading account, credit side, sales return, trading account, credit side, deduct, debtors, balance sheet, asset side, creditors, balance sheet, liability side, expenses, P&L account, debit side, fixed deposits with the bank, balance sheet, asset side, interest on fixed deposit, P&L account, credit, bank overdraft, balance sheet, liability, suspense, balance sheet, liability, but then you clear off the suspense account. Rent 17 months up to 31st August, P&L account debit side. In this, there is one element of prepaid rent. How much is paid? 127,500 is paid for how many months? 17 months. Can you calculate and tell me how much is prepaid? 5 months is prepaid. 37,500. So what will I do for 37,500? Deduct from P&L account and show it on the asset side of balance sheet. Investment, balance sheet, asset side. Investment is made on 1st August at 12%. Can you tell me how much is your interest on investment? Interest on investment 18 lakh 75,000 into 12% into how many months? 8 by 12. कितना बोलो? 1,50,000. Is that clear? Yes, sir. Bank balance, balance sheet, asset side. Interest on investment, where will you show? P&L account credit and balance sheet asset side, outstanding income. Is that clear? Yes, sir. Let me just have a look at the solution once. So the same 4 entries which we gave for rectification, same 4 entries is there on the board. Yes. If I look at my final accounts, opening stock, purchase adjustment, okay, same, sales adjustment, same, closing stock, okay, expenses, same adjustment, Rent. Did we? Yeah, we had rent also. Interest on fixed deposit. Yes, sir. Interest on fixed deposit, interest on investment. Both was there, is it? Yes, both is there in the question itself. Okay. Depreciation, they have given 1,05,000 also. How they got 1,05,000? 10,50,000 into 10%. They have taken depreciation on the opening asset also, which logically should not be done looking at the blue color sentence. Depreciation is to be provided at 10% per annum on fixed assets purchased during the year. Okay, wait. It is not purchased during the year. So I would not have given depreciation then. You can give a note. No, nothing to be given because the question is saying this. We calculated depreciation as 75,000. So this depreciation should not have been there as per the data given in the question. Or you say depreciation to be calculated on total assets. If I see one of the questions in our Yeshas material, they say depreciation to be provided at 10% per annum. Instead of on, they use the word including. If they say including fixed assets, then you give depreciation on both the categories. But if they're specifically saying on, then you should not be giving on the opening asset, only on the asset purchased. Clear? With this, we complete your final accounts question. Let me go to the next point. Ha beta. Yes. Balance sheet interest on investment asset side. You can look at the asset side, interest accrued. You have not received it. If you have received it, it would have been there in the trial balance. They have invested on 1st August. So 8 months interest. Because I did not receive, I'm saying outstanding. Correct. If you have received, where do you get to know? In your trial balance, it will be there. In the trial balance, it is 0. So that's why I'm saying outstanding. So yes, similar treatment over here as well. Is that clear? Yes, sir. With this, we complete final accounts. Next question is dealing with financial statements of non-profit organizations. You can see Dr. Malik started his private practice on 1st April with 8 lakh of his own fund, 12 lakh borrowed at an interest of 12% per annum on the security of his life policies. His accounts were kept on cash basis. They have given you the receipts and payments account. Summarized cash account is nothing but receipts and payments account. Do you remember doing this question in the class? What? No, I dictated this question and we did it. It was not there in the Yeshas material, but I dictated this question and we solved it in the class. So say, yes sir, very nice. Hello, previous question also was there in Yeshas material. I think it's question number 18 or 19. Previous to that also was there in your material. Previous to that also was there in your material. That is where I say concepts remain the same, language of the question will change. Okay, they've given you receipts and payments account. If I read below, they are saying you are required to prepare his private practice income and expenditure account, capital account for the year 31st March. Ignore depreciation. They're asking only income and expenditure account and capital account. In the class, if you remember, we prepared the balance sheet also. Anyways, let us go ahead to solve. First one, own capital 8 lakh. Where will it be recorded? Own capital 8 lakh. Where will it be recorded? It comes to your, everybody will tell me, capital account, credit side. Loan 12 lakh goes to balance sheet. Prescription fee, income and expenditure account, credit side. Visiting fee, income and expenditure account, credit side. Lecture fee, income and expenditure account, credit side. Pension received becomes a capital item. It will go to capital account, credit side. This question does not have any adjustment about outstanding prepaid item. They are mainly considered about capital item versus revenue item, or something related to private practice, something related to personal nature. Medicine purchased, balance sheet. Surgical equipment, balance sheet. Motor car, balance sheet. Motor car expenses, income and expenditure account, debit side. But if I read below, 1/3 of the motor car may be treated as applicable for private use of the car. Whatever expenses are there, what will you do? 1/3 take as drawings, 2/3 take as income and expenditure account. I told that for motor car expenses, motor car is in balance sheet. Wages and salaries, income and expenditure account, debit side. But below that they are saying 30,000 of salaries are in respect of domestic servants. So what to do? 30,000 you take as drawings. Balance will go to your income and expenditure account. Rent of the clinic, income and expenditure account. General charges, income and expenditure account. Household expenses, drawings. Household furniture, drawings. Expenses on daughter's marriage, drawings. Interest on loan, income and expenditure account. Interest on loan, not balance sheet. Income and expenditure account. What was the loan? What was the loan? 12 lakh. What is the rate of interest? 12%. Can you check 12 lakh into 12%? 1,44,000. Coincidentally, here it is matching. Otherwise, what would you get? Outstanding or prepaid. And then you have your closing balance of cash and bank. You understood which item to take where? I hope you will be able to prepare income and expenditure account and capital account. All the items which were drawings, where will it go? Capital account, debit side. I hope that's clear. Medicine purchased, where should it go? Medicine purchased, will it go to capital or will it go to revenue? Beta, surgical equipment is capital, motor car is capital, medicine purchased is revenue, but they've given one point over there. Below that, if I read, stock of medicine is 3,80,000. How much did we pay? 980. How much is the stock? 380. In your income and expenditure account, you will take 6 lakh. 6 lakh goes to income and expenditure account. 3 lakh goes to balance sheet. Closing stock. Not 3. 3 lakh 80,000. 3 lakh 80,000 goes to your balance sheet. Yes, dear. Opening cash and bank will go to balance sheet. Does not affect income and expenditure account. Does not affect your capital account also. Opening cash balance given, sir, here. This is your cash balance. This is your bank balance. You started with cash of 8 lakh. You started with a loan of 12 lakh. What if the interest on loan was not matching? In your income and expenditure account, you would take 12 lakh into 12%. How much? 1,44,000. If the question said 140, 4,000 is outstanding. If the question said 150, or if the question said 150, 6,000 is outstanding. If the question said 140, 4,000 is paid in advance. Outstanding prepaid would go to balance sheet. Income and expenditure account, accrual basis. Receipts and payments account, settlement basis. Accrual basis means you will just take directly 12%. Have they given you a date of the loan? Yes, 1st April. So full 12%. Receipts and payments account is given to you here. They have paid 144, your interest is 144. Both are matching. If they give 150, that means what? In your receipts and payments account, they are giving 150. That means you have paid 6,000 extra. In your receipts and payments account, if they give 140, you have paid 4,000 less. Can we go ahead to the next one? Okay, come down to the next one. Accounts from incomplete records. Freeze Limited gives you the following information. You are required to calculate the total sales and total purchases. What will you prepare? Debtor account and creditor account. Tell me each item, which account, which side. Debtors as on 1st April. Debtor account, debit side. Creditor as on, everybody, creditor as on 1st April. Creditor account, credit side. Bill receivable received during the year. Bill receivable received during the year. That means you have drawn the bills. It will come in your debtor account. In your debtor account, which side will it come? Debtor account on the credit side. Kitna? 1,05,000. Now, beta, bill receivable received during the year can be interpreted in two ways. One, is it bill receivable drawn or is it bill receivable honored? If it is bill receivable drawn, what is your entry? BR2 debtor. If it is bill receivable honored, cash to BR. So that depends on what the question is saying. Let's read further and see if any of the transactions are given to us. Bill payable issued during the year. Where will this come? This will come in your creditor account. In your creditor account, which side? Bill payable issued during the year will come in your creditor account on the debit side. Next one, cash receipt from customers. Debtor account, credit side. Cash paid to supplier. Creditor account, debit side. This has got paused. Yeah, I'll just record it. Cash received, debtor account, credit side. Cash paid, creditor account, debit side. Bad debt recovered. Cash to bad debt recovered will not come. Bill receivable endorsed to creditor. Creditor to BR. Creditor account, debit side. Bill receivable dishonored by customer. Debtor to BR. Debtor account, debit side. Discount allowed by supplier. Creditor to discount received. Creditor account, debit side. Discount allowed to customer. Discount allowed to debtor. Debtor account, credit side. Endorsed bill receivable dishonored. Debtor to creditor. Debtor account, debit side. Creditor account, credit side. Debtor becomes asset. Creditor becomes liability. Sales return. Sales return to debtor. Debtor account, credit side. Bill receivable discounted. Cash or bank account debit. Discount account debit to BR. Does not give an effect. Discounted bill receivable. Bill receivable discounted. Discounted bill receivable. Same thing then. Okay. Cash sales. Cash to sales, you will add to total sales. Cash purchases. Purchases to cash, you will add to total purchases. Debtors as on 31st March, debtor account credit side. Creditors as on 31st March, creditor account debit side. You will get your balancing figure, credit sale, credit purchase. Add cash sale, cash purchase, you will get total sale and total purchase. Is that clear? Okay. Continue ahead. Retirement of a partner. On 31st March, balance sheet of PQR showing profits and losses in proportion to capital stood as follows. Land and building, plant and machinery, stock of goods, debtors, cash and bank. Capital of PQR, sundry creditors. Can you give me the profit sharing ratio? 50, 75, 50. 1 is to no. Check your 50 is to 75 is to 50. 2 is to 3 is to 2. That is your profit sharing ratio. On 1st April, P desired to retire from the firm and the remaining partners decided to carry on business. It was agreed to revalue the items on the following basis. I first read what is the requirement. Prepare revaluation account, capital account of the partners, cash account and the balance sheet. Can you all tell me the treatment immediately? Yes, sir. Land and building to be appreciated by 20%. Revaluation account, credit side. Plant and machinery to be depreciated. Revaluation account, debit side. Stock of goods to be valued at 25. Given value 30. Going downward. Revaluation account, debit side. Old credit balances of sundry creditors 5,000 to be written back. Where will you record? Sundry creditors to be written back. It will come in your revaluation account, debit credit side. Your value of sundry creditors is going down. Written back, written off means the same. Provision for bad debts provided at 5%. Revaluation account, debit side. Point number 1 to 5 talking about revaluation. Joint life policy of the partners surrendered, cash obtained 18875. Do we have JLP in our balance sheet? No, sir. So entire amount of 18875, what will you do? Partners capital account credit side in the ratio 2 is to 3 is to 2 and it will go in your cash account on the debit side. Goodwill of the entire firm 35,000. P share would be adjusted in the accounts of Q and R who shared profits equally. Old profit sharing ratio 2:3:2. New profit sharing ratio 1:1. You calculate gain or sacrifice, gaining partner to sacrificing partner. Total capital of the firm is same as before retirement. Kitna? 50, 50, 75. 1,75,000. 1,75,000 in which ratio? In the ratio 1:1. What is the capital of each partner? 1,75,000 divided by 2, that is equal to 87,500. Balance carried down is given to you. What will be your balancing figure? Either cash introduced or cash withdrawn. Amount due to P is to be settled on the following basis: 50% on retirement, 50% you pay, 50% within 1 year. This will go to your cash account, this will go to your loan account. Any doubt in any of the treatment? Will you be able to prepare? Okay. Next point. Now, again, this question have we done in class? Have we done such a question in the class? Yes, sir. Have we done such a question in the class? Yes, sir. Entire RTP is from your Yeshas material itself. There's nothing new. Death of a partner. The partnership firm consists of 3 partners, alpha, beta, gamma, ratio 2:1:1, fixed capitals 90, 36, 24,000 respectively. The partners be allowed at interest at 8% per annum on fixed capital. No interest to be allowed on undrawn profits or charged on drawings. I remember again reading such a question. Upon the death of a partner, goodwill of the firm be valued at 2 years purchase of the average net profit after charging interest on capital for the 3 years preceding 31st December preceding the death of a partner. Insurance policy of 75,000 was taken in individual name of each partner. Premium was charged against the profit of the firm. Surrender value 20%. Upon the death of a partner, he is to be credited with his share of profit, interest on capital up to 31st December following death. That the share of the partnership policy be credited to the deceased partner on 31st December. Partnership books be closed on 31st December. I am not solving this question. Why? Peter, Paul, Prince, Xerox copy question in Yeshas material. Exactly the same question we have done in the class. Numbers have changed. It's question number 40. Somewhere. Peter, Paul and Prince. Same question we have done in the class. Remember, yes or no? Very good. Coming down below that, everybody. Issue and redemption of shares. The question is dealing with pro rata allotment. Can you solve? Yes, sir. I want you to solve question number 14. I'll give you 5 minutes. Start solving this question. Question number 14. A Limited company. A Limited is a company with an authorized share capital of how much? 2 crore 50 lakh in equity shares of rupees 10 each, out of which 15 lakh shares had been issued and fully paid up as on 31st March. 2 crore 50 lakh, 10 rupees each. How many shares? 25 lakh shares are there. In that, 15 lakh shares are already issued. The company proposes to make a further issue of 3,37,500 shares of these 10 rupee shares at a price of 14 each. What is the face value? 10 rupee. What is the issue price? 14. How much is your premium? Your premium is rupees 4. Agreement of payment being as follows: 2 rupees payable on application. Allotment to be made on 10th June and a further of 5 rupees per share including premium to be paid. Final call for the balance to be made. Money received on 31st December. How much is the balance? 2 plus 5. 7 is collected. How much is remaining? 7 should be collected. Understood the first paragraph? Of course, along with the dates. Applications were received for 14 lakh shares. What is the question dealing with? Over subscription, and was dealt with as follows. Applicants for 25,000 shares received allotment in full. The first category, 25,000 applications have received full allotment. Applicants for 1,25,000 shares received an allotment of 1 share for every 2 applied for. No money was returned to these applicants, the surplus on application being used to reduce the amount due on allotment. First category, blue color, full allotment. Second category, yellow color, 1,25,000 applicants got 1 share for every 2 applied. No money was refunded. Extra money was used for your allotment stage. Applicants for 12,50,000 shares received allotment of 1 share for every 5 shares applied for. Money due on allotment was retained and the excess being returned to the applicants. Money due on final call money was received on the due date. You are required to record these transactions in the books of A Limited. Can we go ahead to record? Can we go ahead to record? Yes, sir. I am going to prepare a working note before we record the transactions. Can you all tell me what will be the headings of the working note that you prepare? Tell me, do you know the working note for pro rata allotment? Yes, sir. Can you all tell me what would be the working note? You can start with your category, then number of shares applied, number of shares allotted, amount received on application, amount required on application, amount required on allotment, amount adjusted from application, amount that can be refunded, and finally you check your allotment stage. I'll repeat the columns. Everybody together, what do we have? Category, that is your A, B, C, whatever categories are there. Then you have number of shares applied, number of shares allotted. Is that clear? Yes or no? Amount received on application, amount required on application, amount adjusted or amount refunded. Then what do you have? Amount due on allotment, amount received on allotment. Yeah, correct. Let us go ahead to solve the question. Everybody will reply. Category 1 marked in blue color on screen. How many applications? Everybody will reply. How many applications? 25,000 applications. How many shares are allotted? 25,000 shares are allotted. How much is received in the application stage? Your application money is 2 rupees per share. Kitna? 50,000 is received, 50,000 is required. There is no adjustment, there is no refund. Allotment stage, how much is per share? 5 rupees. What is the total money due? 25,000 into 5, 1,25,000. How much will be received? 1,25,000. How many of you got category A correct? Good. Let us come down to category B. In your B category, how many applications are there? Marked in yellow color on the board. 1,25,000 applications are there. They received 1 share for every 2 shares applied. Can you tell me how many shares will be received? 1,25,000 into 1 by 2. 62,500 shares are allotted. Number of shares applied 125, number of shares allotted 62,500. How much money is received in the application stage? 125 into 2, 2,50,000. How much is required? 62,500 into 2, 1,25,000. How much extra is there? 1,25,000 will be adjusted. There is no any refund. How much is the amount due on allotment stage? 5 rupees into 62,500 or 125? 62,500. 5 rupees into 62,500 kitna? 31 lakh or 3 lakh? 3,12,500. 3,12,500 is due. But how much will I receive? 125 I received in the application stage. So now I will receive 187,500. How many of you got this also correct? Good. Let me come down to category 3. Category 3, number of shares applied. Kitna? Marking in green color on screen. 12,50,000. Allotment of 1 for every 5. 12,50,000 applicants into 1 by 5. 2,50,000 shares are allotted. How much money we received? 1250 into 2. 20, 25 lakh, is that correct? 25 lakh. How much is the amount required? 2.5 into 2, 5 lakh. How much is extra available? 20 lakh is available. Can I say I will adjust 20 lakh? No, sir. Why? You check how much is required in the allotment stage. Allotment stage 5 rupees into 2,50,000 shares. Kitna? 12,50,000 is required. So how much will you adjust? 12,50,000 only. How much was the extra money? Extra money was 20 lakh. 12,50,000 adjusted. How much will be refunded? 7,50,000. How much will you receive in the allotment stage? Zero. Whatever was extra was there in the application stage itself. This is exactly what I showed you in the marathon class. That particular calculation which the company makes. Number of shares applied, number of shares allotted, how much money is received, how much money is required, balance to be refunded. Is that clear? Okay. Yes, dear. Is it necessary to follow exactly the same format? No. If your calculations are matching, then okay. After this, what will you do? After this, preferably to take a total. Why? Go back class. Why to take a total? Because these will be the amounts. The black color amounts will be the amount which you record in your journal entries. So take a total at the end. Can you all tell me what will be the journal entries? We'll start from first. I'll come down to your answer and look at it. What is the first entry? 1 minute. Bank account debit to share application account. Yeah. Bank account debit to share application account. Which column? If I come back here, which column? Go back class. Yeah, third column. Amount received on application. 1, 2, 3, 4, 5, 6, 7, 8. Third column you will record over there. Bank to share application. Then share application will be transferred where? To share capital, to share allotment, to bank. To share capital kitna? The number of shares which are allotted. To allotment kitna? The amount which is transferred. To bank kitna? The amount which is refunded. So if I look at the column, share application will be column number 3. Share capital will be how much? Column number 4. Amount required on application. Share allotment, I'll transfer how much? Column number 5, which is adjusted, and then bank will be column, it's written over there, column 5 and column 6. Bank account will be the amount which is refunded. Is that clear, everyone? Yes or no, sir? After this, what entry will you pass? Allotment money due. Entry bolo. Share allotment to share capital. How much money? Share allotment to share capital? No. You should also pass something there. To securities premium. How much money? 5 rupees is due. In that 4 rupees is premium, 1 rupee is capital. So I'll go ahead to say equity share allotment account debit. Kitna? No, how many shares? 3 lakh. 3,37,500 into 5. Out of that, 1 rupee goes to your capital and 4 rupees goes to your securities premium. Is that clear, everyone? Yes or no, sir? Is it 3,37,500? Yeah, correct. Then when you receive allotment money, bank to share allotment, how much? The last column here, how much is received? Column number 8. Below this, I will record bank to share allotment, column number 8. Call money due, call money received, no complaints over here. 337,500 into 7 rupees. How 7 rupees? Issue price 14 minus application minus allotment. Pro rata allotment, simple. How many of you got it right? Very good. 10 marks in the exam. That's all, yeah. There's 4 questions more. Yes, pro rata will come for 10 marks. These journal entries and this working note carries 10 marks in the exam. Has come multiple times. Has come multiple times. Working note carries marks, obviously. You can do the working note in your own way, not necessarily exactly to be presented word to word as on the board. The next part of the question dealing with issue and redemption of debentures. Everybody on the board. On 1st April, Weavers Limited issued 5 lakh 12% debentures of 100 each at a discount of 5%. What is the face value? 100. What is the issue price? 95. Redeemable on 31st March. Redemption price not given. Redeemable at par. Issue was oversubscribed by 1 lakh debentures who were refunded their money. Interest is paid annually on 31st March. One time in a year, you are required to prepare journal entries for issue of debenture. You tell me. First, what will you record? Bank account, go back class everyone. Bank account debit to debenture application and allotment account. Kitna? Kitna? 6 lakh debentures into 95. Why 6 lakh? Over subscription of 1 lakh. So I'll just write on the board. Your entry will be bank account debit to debenture application account. 95 rupees into how many debentures? 95 rupees into 6 lakh debentures. That is equal to how much? 57 crore. 5 crore 70 lakh. It's okay. Well, paying me also, you pay 10 extra always. So 5 crore 70 lakh. Now this debenture application and allotment will be transferred where? To 12% debentures account, and you will also have 2 bank account. Is there anything else? Yes, sir. Along with this, you will also have loss on issue of debenture debit. Debenture account debit kitna? 5 crore 70 lakh. To 12% debenture, 100 into 5 lakh. Kitna? 100 into 5 lakh. 5 crore. This is 5 crore 70 lakh. Okay. Loss on issue of debenture kitna? 5 lakh debenture into 5 rupee. 25 lakh. Refund 95 rupee into 1 lakh debenture. 95 rupee into 1 lakh debenture. Check if it is matching. Check debit credit matching, yes or no. Is there any other entry? Is there any other entry? No, sir. So you can look at it on the board a little more neatly. Bank to debenture application, discount to bank to 12% debenture. Is that clear? That's the first part. Second part. Discount on issue of debenture account. They're asking you to prepare ledger account. What was your total discount? Your total discount is 25 lakh. What is the life of the debenture? Marking in green color. Where have they given? Redeemable on 31st March 2030. So issue on 1st April 2015. How many years? 5 years. So what will I do, sir? 1/5 will be written off every year. If this is your ledger account, discount on issue of debenture. How should I start my entry? To 12% debentures account 25 lakh at the end of the year. By PNL account kitna? 5 lakh. How 5 lakh, sir? 25 lakh divided over 5 years. 1 lakh will be taken to PNL account every year. At the end of the year, then what will I do? By balance carried down. Kitna? 20 lakh. In the second year, what to do? To balance brought down. 20 lakh. Same entry again. What is the same entry? By P&L account, by balance carried down. P&L account kitna? 5 lakh. Balance carried down 15 lakh. Third year, again, to balance brought down 15 lakh. End of the year, by P&L, by balance carried down. P&L kitna? 5 lakh. Balance kitna? 10 lakh. Like this, you will prepare for fourth year and for fifth year. Same thing visible on the board. Every year, prepare the same. In this question, multiple times you will see rupees will be mentioned in hundreds, thousands, or lakhs. Can we do this in the exam? Yes. Whenever we write amount, we write rupees in the amount column. What does that rupees denote? It is in rupees. There itself you can say rupees in thousand, or you can say rupees in lakhs. The word rupees just indicates that it is the actual number. That is why we write rupees everywhere where we write amount. Is that clear? Can we write thousands or lakhs in the exam? Yes, you can. Be careful if the question is given in the same way. Understand the amount carefully. Next part of the question, what they are saying, interest account and debenture holder account assuming TDS at 10%. Interest account, very simple. Interest is what type of account? Interest is an expense. Very simple. Interest account or interest on debenture account. Debit side to debenture holder. Credit side by P&L account. Every year, same entry will be recorded. Tell me how much? Tell me how much? 5 lakh debentures of 100 each. 5 lakh into 100 into 12%. 60 lakh. 60 lakh is your interest. Every year you will record the same entry you can see on the board. Interest account to debenture holder by P&L. To debenture holder by P&L, 60 lakh every year. Any doubt in this part? No, sir. Ansika. Next one. Apart from interest account, they've also asked to prepare debenture holder account. Debenture holder account. What will we record? You record the interest first. How much is the interest? Debenture holder account by interest. How much was the interest that was payable? 60 lakh. Out of that, 2 TDS will be 10%. Kitna? 6 lakh. 2 balance, 2 balance carried down. No, 2 bank 54 lakh. You are supposed to pay 60 lakh. 6 lakh was deducted as TDS. 54 lakh was paid. Same entry will be there every year. Debenture holder account on the board. Credit side by interest, debit side TDS and bank. Is this clear, everyone? How many of you got these ledger accounts and journal entry right? I pray that this comes in the exam. Very simple. Xerox copy every year you have to do. Don't go wrong in the concepts. Yes, dear. 6 lakh is your TDS. 60 lakh is your interest. 10%. Rupees in hundreds, not thousands. Okay. Understood, everyone? Can I go ahead? Okay. Come down to the next question. I want you to solve this question. Everybody on the board. XYZ Limited has issued 2,500 12% convertible debentures of 100 each, redeemable after a period of 5 years. According to the terms of the issue, these debentures were redeemable at a premium of 5%. Face value 100. Premium will be 5 rupees. The debenture holders also had the option at a time of redemption to convert 20% of their holdings to equity shares of rupees 10 each at a price of 20 rupees per share and the balance in cash. 20% can be converted to shares, balance can be taken in cash. Debenture holders amounting to 50,000, not number of debentures. Value 50,000 opted to get their debentures converted into equity shares as per the terms of the issue. You are required to calculate the number of shares issued and the cash paid for redemption of 50,000 rupees wala debenture holder. I want you to calculate number of shares and how much money to be paid. Try everyone. I'm giving you 1 minute. 1 to 2 minutes I'm giving you. Try. How many debenture holders choose for conversion? They have not given the number of debentures. They say 50,000 worth of debentures. That means how many debentures? 500 debentures. 500 debentures, or rather I should say debenture holders opting for conversion is 500. How much is applicable? How much is eligible? 20%. So in that applicable at 20%, can I say 100? Agree, yes or no? Out of that, what is the redemption value? These 100 debentures will be redeemed at 105. How 105? 5 rupees premium. 100 into 105, 10,500 rupees I have to redeem. I am giving shares. Shares of how many rupees? Shares of 20 rupees. How many shares? 10,500 divided by 20, that is equal to 525 shares. I will give them 525 shares. And what about the balance? There is balance 80% debentures remaining. 400 debentures are remaining. 500 into 80%. These 400 debentures will get how much? 400 into 105, 40, 42, 45. 42,000 rupees. So to these 500 debenture holders, we will give 525 shares and we will give 42,000 rupees. Number of shares 525, cash paid 42,000. Is that clear, everyone? Yes or no, sir? How many of you got this right? Good. Come down to the next part. Last two questions. Everybody, full participation. Very easy question. Following is the extract of the balance sheet of Super Limited as on 31st March. Authorized capital is given to you. Issued and subscribed capital is given to you. There are 6,75,000 equity shares, 60,000 preference shares. Both are fully paid up. You have reserves and surplus, general reserve, CRR, securities premium collected in cash, profit and loss account. On 1st April, the company decided to capitalize its reserves by way of bonus at a rate of 2 shares for every 5 shares held. Can you tell me number of bonus shares first of all? How many shares are there? 6,75,000. 6,75,000 into 2 by 5. Kitna? 2,70,000 shares will be issued. 2,70,000 shares will be issued by capitalizing what? Reserves. What will be your entry? Which one will you use first? Capital redemption reserve, then security premium, then either PNL or general reserve. CRR debit 3 lakh, SPA debit 187,500, PNL debit 15 lakh, GR debit 9 lakh. No. Check how much money you need. 2,70,000 debentures into, what is the value of each debenture? 10. So you need 27 lakh. 3 lakh will be taken, 187,500 will be taken, then you can use general reserve of 9 and how much of PNL? 27 lakh minus 9 lakh minus 3 lakh minus 187,500. 13 lakh 12,500 will be taken from PNL account. CRR debit, SPA debit, GR debit, PNL debit to bonus to equity shareholder. Bonus to equity shareholder account debit to capital. Is that the entry? Yes, sir. Exactly the same. The same amount that we got, 13,12,500. Got it? Okay. The question has also said, prepare the extract of balance sheet after bonus issue. Can you tell me which elements will change? Authorized capital. Authorized capital will also change, beta. Why? 6,75,000 was existing. 2,70,000 I have issued. Kitna? 9,45,000. Your authorized capital is only 750. So you need to pass a resolution and assume that the authorized capital has been increased. Now, in the solution, you can see authorized capital has been increased. Then you have your issued capital. Out of that, bonus shares will be shown separately. Then you have your preference shares. Reserves, everything has been used. You will have only CRR, we use the full one. SPA will be used full. GR we used full. PNL will be remaining. Whatever is remaining, you show under reserves and surplus. Everybody clear? Clear on this particular question? Can we go to the last one? You will answer. Fundamental accounting assumptions. Wow. Going concern, consistency, accrual. Retirement of a bill of exchange. Retirement of a bill of exchange, bolo. Early or late? Early settlement. Because there is early settlement, you will have a discount. Discount allowed in the books of drawer. Discount received in the books of drawee. The time limit for discount is from date of actual settlement up to the maturity date. This is called as retirement. Petty cash book and advantages. Petty cash book records all small petty transactions of cash. The word petty means small. Advantages, very good. Saves time of the main cashier, reduces the number of transactions in the main cash book, efficiency and better control over small transactions. Machine hour rate method of calculating depreciation. Life is given in number of hours. Your rate of depreciation per hour remains the same. Depending on the useful life, depending on the expected number of hours, calculate depreciation per hour. Depending on your actual hours used, calculate the depreciation for the year. This was simple. I want you to think and tell me last point. When Garner versus Murray is not applicable in case of dissolution of partnership firm. Think for 30 seconds and then give me an answer. Case 1, when all partners are solvent. Case 2. Case 2. Yes, dear. When there is an agreement between the partners. If there is an agreement between partners, then you don't follow Garner versus Murray. You follow whatever is agreed. Then when all partners are solvent, or one more case is there when a partner has debit balance in capital. Solvent partners will share the deficiency in their capital ratio, but a partner having debit balance will not share it. I'll just look at the answers. When a solvent partner has debit balance, when the firm has only two partner, one partner solvent, one partner insolvent, when there is an agreement between partners, and when all the partners are insolvent, or you can also say when all the partners are solvent. Artha aitu? With this, we completed our RTP for September. All of you getting confident by looking at the questions? But our concepts remain the same. Question will be new in the exam. I really wish you all the best for the exam. Yes, dear. All partners are solvent also, it will not be applicable. All partners are insolvent also, not applicable. All partners are insolvent, who will give the money? Nobody can share the deficiency loss. Yes, any other doubt before we close? No, sir. Then shall we stop here? I'm not going to say I'll see you tomorrow. I'll see you all at CA Inter. Till then, take care. Thank you.